Hello, good day, guys. My name is Nick, technical analyst with SuperForex. Today, we shall be looking at the technical analysis on the currency pair NZD USD, and first we'll be talking about fundamentals before we move right down ahead to technicals, which is purely what we're going to be seeing on the chart. Now, we have seen that the NZD USD pair recovers a few pips from a nearly 3-week low touched during the Asian session on Thursday, and this low, of course, has been having much effects on the market following the most recent news events. And of course, we are seeing that a probable touchdown to just below 0.6100 could mean that a closer mark to the 0.6100 mark is probably in the books. Now, on a technical aspect, we're looking at Hong Kong filmmakers say sponsorship laws books investors, while dollars hit the 7-month high versus the yen on policy split. Also, ruble hits 15-month low, past 87 versus dollar on political risk concerns. Now, this is really having the stages of a modest bounce from a multi-week low. Although the upside seems limited, the divergent RBNZ Fed policy outlook should continue to act as a headwind for the major. Now, the worsening US-China relations might also contribute to capping the upside for the Kiwi. Now, the NZD USD pair recovers a few pips from a nearly 3-week low touched during the Asian session on Thursday, and now trades just below the 0.6100 round figure mark. And the fundamental backdrop, however, remains tilted in favor of bearish traders and warrants some caution before positioning for any meaningful upside. The New Zealand dollar has been one of the most performing G10 currencies in the past 24 hours in the wake of the diverging monetary policy outlooks between the Reserve Bank of New Zealand and the Federal Reserve's FED. Now, in the word mentioning that the RBNZ, after raising rates by 25 BPS to 5.5%, or the highest in more than 14 years in May, has signaled that it was done with its most aggressive hiking cycle since 1999. Now, the RBNZ also sees rates peaking at the current level, and before rate cuts commence from the third quarter of next year, especially now at the point that we have a close double whammy at a support of 0.60665. So what do we expect from this? A transition means that probably will reach out to the support with mere breakout to a new zone, checking out 4-hour time frame and confirming this. A new zone would be at 0.60116, which is at about 68 pips to 70 pips from that entry point, of course, which is good money. Alternatively, we might see a bounce back to the upside if things don't go as required, and a correction of this, which is up about 51 pips from the entry point to 0.61326, of course, good money. And that's our technical analysis on today's currency pair NZD USD. Now let's move over to the stock markets. Hello, welcome back, guys. And on today's stock market, we'll be having a look at China Mobile Limited. Now, China Mobile Limited is a China-based company mainly engaged in communication and information services. Now, the company's businesses include personal market business, family market business, government enterprise market business, and emerging market business. Now, the personal market business mainly provides mobile communication services and internet access services. Now, the family market, of course, provides a broad band of access services. Now, the government enterprise market business provides basic communication, information application products, and data communication, as well as technology. Now, the emerging market businesses include emerging fields such as international business, digital content, and mobile payment. Now, on the financial aspect, we've seen that China Mobile Limited reported earnings results from the first quarter ended in March 31st, 2023 for the first quarter. And the company reported revenue was CNY 250,746 million compared to CNY 227,320 million a year ago. Now, net income was CNY 28,000 million compared to CNY 25,624 million a year ago. So now, what to expect from this on a technical level? We are seeing a broadband expectation of a covering of the reach out to a new resistance point at 29.97, which is about 25 pips from that entry point, of course, which is good money. So if we're to make an entry on this point and let our trade run up to this point, we're looking at about 25 pips and an extension, of course, to the upside we're expecting a total 62 pips. If possible, a breakout of this resistance occurs, and now we have to reach out to a new resistance point at 34.32, which is 62 pips from that entry point, of course, which is good money. And that's our technical analysis on today's stock market, China Mobile. I remain your host, Nick. Bye for now.